Ladies and gentlemen, I welcome you all to the Q3FY24 post-earnings conference call of Kilburn Engineering Limited. Today on the call from the management team we have with us Mr. Ranjit Lala, Managing Director, Mr. Sachin Vijayakar, Chief Financial Officer, Mr. Amritanshu Khetan, Director, and we also have Mr. K. Vijay Shankar Karta, who's the MD of ME Energy Private Limited, the recent company acquired by Kilburn Engineering. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements, which may involve risks and uncertainties. Also, a reminder that this call is being recorded. I would now request the management team to detail us about the performance highlights for the quarter that went by, the growth plans and vision for the coming year, post which we will open the floor for Q&A. Over to you, Ranjit sir.
Thank you, Vinay. Good afternoon to all. I welcome you all for the Q3 Financial Year 24 post-earnings conference call. We are pleased to announce the Q3 results of Kilburn, which are as follows. The income from operations stood at 72.8, which was an increase of 35% from the corresponding quarter of the last financial year. The operating EBITDA stood at 17.2 crores, which is an increase of 90% from the corresponding quarter of last year, which translated into an EBITDA margin of around 23.7%, up by 687 basis points from the similar quarter last year. The EBITDA margin for the 9 months of the current financial year stands at 22%. This is because of the mix of the orders which have been executed with higher margins. The profit before tax stood at 14.8 crores, up 40% from the corresponding quarter last year, and profit after tax at 10.3 crores, approximately 37% up from the corresponding quarter last year. Based on these numbers, we can say that we have had a sustained revenue growth across all 3 quarters in the current financial year, and we expect this to continue. We have maintained a strong and diversified order backlog of 36 crores as on December 31st, 2023. In Q3 FY24, we also secured orders worth 95 crores, which indicates a sustained and strong demand for our products and solutions. I would also like to give you an update on ME Energy. In the last quarterly results meeting, we had apprised you of our proposed acquisition of ME Energy, and I'm pleased to inform that the acquisition process will be soon completed, and Mr. Vijay Karta, the MD of ME Energy, is also available on forum to speak more on the company and also address any questions from you all. I would further state that a roadmap for the integration of ME Energy and KEL is worked out on a broader level, and detailed plan is being put in place. We have already started leveraging this new relationship to build businesses in new industries like steel and further penetration in the carbon black market. As far as the order book of ME Energy is concerned, the closing order book on 31st December 2023 stood at 118.5 crores. On the future outlook of Kilburn Engineering and ME Energy, I would say that on the order side, on the inquiry side, we have around 1,000 crore plus of inquiries, which we are addressing, and same is also applicable to ME Energy. For their product portfolio, they have around 1,000 crores of inquiries. The revenue expected for Kilburn in the current financial year is expected to be in the range of 290 to 300 crores by the end of Q4 on a standalone basis. The revenue for ME, which would be added to the KEL share post-acquisition, would be in the range of 30 crores. The close order book for Kilburn as on 31st March 2024 is expected to be in the range of 260 to 280 crores, and for ME Energy is expected to be in the range of 70 to 80 crores. This would translate into an open order book of 330 crores plus on 1st April 2024. With the integration in place, we expect to achieve a turnover of 500 crores plus in the next financial year at the group level. The EBITDA levels for KEL for the current financial year are expected to be in the range of 18 to 20%, and for ME Energy in the range of 15 to 20%. On the capex front, I would like to apprise you that we are expecting a capex in the range of 15 to 20 crores over the period of next 18 to 24 months. With this, I conclude my briefing and I request Mr. Karta to give a brief background on ME Energy and about himself. This will then be followed by the question and answer session. Over to you, Mr. Karta.
Thank you, sir. So, a very good morning to, or rather good afternoon to all those who are present for the presentation today. My name is Vijay Shankar Karta. The short name is Vijay. And I am part of the founding team of ME Energy, and I had been heading the organization since founding 2 decades ago. ME Energy started off as a very tiny organization with just 3 people, friends coming together and starting off. But the real growth happened in the last 10-12 years. Like any other startup venture, ME Energy had its own strength as well as weaknesses. The nimble operations, faster response, better customer services, all these positive strength could not be matched with the required financial and market strength in the last 12, 13 years of growth. And we believe the alignment with Kilburn Energy working together, being part of Kilburn Group, is going to bring in and plug this weakness that we have faced for the growth of the company. So we are also very bullish and looking forward to bring in a lot of growth to the group and the investors. So talking about ME Energy is fully into custom-built systems which are designed to specifications, and our focus is on thermal energy saving. We recover waste heat available or coming out of processes in the industry, put an equipment to capture it as well as reutilize it in a big way. So over the last 2 decades, we have amassed a good reputation in the market. We have almost all the tier 1 corporates of India as customers with us. Like you name it, like Reliance or Britannia or HPCL, BPCL, IOCL, Shell, these kind of tier 1 customers. However, we had inherent weakness that we were not able to bid for larger value projects for the reasons I specified earlier. So I think this unshackling of this week from this position is going to bring in a lot of strength to us. So what we have seen is last 2 years to 3 years, the major businesses coming to us from steel industry, waste to energy, where the incinerator, for the waste heat recovery systems at the back end of incineration systems in the industry, food industry specifically from Britannia, where we have innovated and made a product specifically for them. So the future is bullish. Like Britannia, what we have done for Britannia is to reduce fuel cost of baking by almost 50%, and further we made systems suitable for baking biscuits using agro waste like rice husk or other biomass briquettes, and the systems have been proven. They're in operation. Currently we are executing major projects for BL. Current year, Britannia itself contributed around 30 crores turnover into ME Energy. So going forward, we look forward to bidding for larger value projects like 50 crores and 100 crores packages, and also acquire the acquire benefits from the market presence of Kilburn, the brand image of Kilburn, and the presence of a few locations other than our own office in Pune. So overall, ME Energy as a team is very bullish and happy to be associated with this group. Talking about ME Energy's group, we are approximately 100 engineers and managers. Almost 25 of them have been added after the Kilburn acquiring has been announced in preparation to the next 2 years of spurting growth that we are looking for. So prior to announcement or prior to planning of this acquisition, we were around 70 engineers and managers. Currently, we are at 100, and we have added people to the organization looking at what is going to be in store in the coming and forthcoming financial years. And our people strength is very well spread out between people who are seniors with a lot of experience in the plant and systems that we do. That brings in good amount of knowledge and capabilities. And we have a lot of young shoulders, young blood in the organization who brings in innovative thinking, out-of-box thinking, and a lot of energy and nimbleness to the organization. The average age of employee at ME Energy is around 30. That's one of our major strengths, and we look forward. There's ample provision within ME Energy's factory for expanding the productive area under crane, what we call, that is suitable for producing this supplies for customer, can be enhanced into 3x by a little investment that we have planned in the near future. So overall, gentlemen, we are looking at a very bright aspect, and whatever we have not been exploited until now against larger competitors in the market is going to be open for us. And with the Kilburn's Kilburn helping us to open boardroom opportunities, I think it's going to be better days ahead. That's all. Thank you, gentlemen.
Thank you, sir. We'll now open the floor for Q&A. All those who wish to ask a question may use the option of raise hand, and we'll call you in the order of the hands raised. The first question is from the line of Garvit. Garvit, you can go ahead, please.
Hi, good afternoon. Am I audible?
Yes, Mr.
Coming to your guidance, so in earlier con call you were guiding for 400 CR kind of turnover. So now it is, I think, 330 CR you mentioned in your opening remark. So what is the reason for it?
Can you repeat your question, please?
In earlier con call you guided for 400 CR turnover on consolidated basis for FY24. And in opening remarks today you mentioned 330 CR. So any specific reason for it, or?
Right. So, there has been some spillover as far as Kilburn is concerned into the next financial year. So that's why we would be in the range of 290 to 300. And as far as ME Energy is concerned, we would get the share of the execution only to the extent after the acquisition is complete. So that would be in the range of 30 crores. Okay, that's the reason why this difference.
So the kind of numbers like you gave for the order books and the revenue numbers. So considering that, are you people looking for more than 100 CR kind of order inflows in next in this particular quarter for Kilburn?
Yeah, we as I said, we have 1,000 crore plus pipeline, and we are at an advanced state, and I'm sure we will touch in the range of 100 crores.
Okay. And sir, in your recent filing for the order books, we got an order of hydrogen fluoride reactor. So can you spend few moments on this product, and is this product in any way related to the hydrogen production scaling up in India?
Well, I'm sorry, but I will not be able to give much details on that.
Okay. So is it a new product, or are we already manufacturing it for the last year, or is it a new product?
Well, it's a customized product for for them, and this is on similar lines what we have been manufacturing in the past. But I can come back to you with more details. We can take this question back.
Okay, sir. And one last thing on the margin side. So, our current level of margin sustainable, like you mentioned in your opening remarks, the margins are at this level because of the product mix. So, the new orders that we are getting, so those orders are also in the range of higher margins, or what is the margin profile for those new orders?
So the margins keep changing from project to project, and consistently we have said that we would be having margins between 18 to 20%. So there have been a couple of quarters where we executed projects with higher margins, but I think we will end the year in the range of 20%, 18 to 20%. And
So
this
when you say FY25 500 CR kind of turnover, so on that level, what kind of margins do you anticipate? Like order books are currently in our hand only, so you definitely know what is the margin profile for those orders. So considering that,
we expect the margins to be in the range of 18 to 20% for Kilburn and around 15 to 20% for MENR.
okay,
And a lot more
understood.
clarity will one second. A lot more clarity will come when we close the year.
Understood. That's it from my side. I'll join the queue.
Thank you.
Thanks, Garvit. We take the next question from Ganesh Kumar Sankaran. Ganesh, you can go ahead, please. We'll move forward to the next participant. We'll go ahead. Manan, you can go ahead, please.
Yeah, hi. Thank you for the opportunity and congratulations on good set of numbers.
Thank you.
I believe when we started this year, we started the year with an order book of almost around 350 odd crores, right?
No, it was 240 crores.
240 crores, but I think by end of Q1 we were closer to 300 plus sort of crore order book, right?
No.
Okay, fair point. But still, for this year, again, we are targeting the year-end order book of around 230 to 40 crores only, despite targeting for a much higher revenue growth for the next year. And I mean, it's for more than a few quarters now, we've been having a inquiry pipeline of of 1,000 plus crores. And I mean, our conversion rate has not kept pace. So anything that you can throw some light on that side?
Well, when you say the conversion pace, you're talking about the revenue, the turnover part of it?
No, the conversion of your inquiries. Conversion of inquiries.
Right. So I think, as far as the conversion is concerned, I mean, we do see some delays in convergence of some orders, but by the end of this year, I'm sure we will, in this current quarter, we are talking about 100 crores. See, these are things which keep fluctuating from time to time. There could be some delays in decision making by the management of our customers. There could be, some other delays. There could be delays of, capital outlay from their end. So these are a part of business. I think what's more important is that we have a consistent inquiry pipeline and we have a reasonably good conversion rate. And I think that's where we are placed very well.
Okay, so then you are still confident that with an closing order book of around 230 to 40 crores in the year end, we will be able to clock around 400 odd crores for Kilburn?
For the next financial year.
Yeah, next financial year.
Yes, absolutely.
Okay, sure. My next question was for Mr. Vijay. Sir, how has life changed post acquisition for you, and in terms of inquiry, in terms of business, and in terms of the atmosphere among the ME Energy employees and staff? I think you are on mute, sir.
Mr. Vijay, you're on mute.
Yeah. Can you please repeat, sir? I missed it.
Yeah, I was just saying that how has life changed for you and ME Energy post this acquisition, and in terms of inquiry, in terms of the business atmosphere, and also in terms of the employees, and how has life changed for you?
Yeah, see, post acquisition, there is an overall, positiveness. People looking forward for bigger and larger things. As you would agree, anyone wants to work on larger projects and bigger equipment and complete more. The challenge for a project manager is to do a larger project. A challenge for a designer is to do more complicated things and first of a kind systems and things like this. So, people see this as an opportunity for their own personal growth in terms of professional aspirations. And as a company, we are looking forward that this brings in, opens up a lot of doors for us and growth. This is the overall feeling within the organization. And personally, for me, having being part of the founding members in M Energy, founded as a founder, for me, the growth of the companies or the organization, the child that I have kind of given birth to is uppermost in our mind, and our objective have always, the objectives have, topmost of the objective has always been to see that the company does well. And really speaking, just before COVID times, we were going to cross a major milestone of 100 crores, and then the COVID came and it went down. So again, like that 100 crores slogan is upright in everybody's mind. And life is going to be good. That's what people expect.
So ME Energy would be closing this year at what sort of revenue?
This year, ME Energy will close anywhere 65 to 70 crores turnover.
Okay.
That will be almost 190% of almost 2x, close to 2x of last year for us.
Right. And this capex that we are doing is for ME Energy, or is it for Kilburn?
Pardon?
It's at the group level.
It's at the group level.
Yeah, the figure which I mentioned of 15 to 20 crores would be at the group level.
Okay.
Some of it would be for expansion of the facility at Pune, which Mr. Arka just mentioned in his briefing.
Mm-hmm.
And some of it would be at our factory in Saravali, in Thane district. Yeah.
Okay. Probably
that ME with the kind of infrastructure.
Sorry, just to add a small corollary to Mr. Ranjit Lala said. You see, we have the Kilburn has a very good, well-equipped factory in Kalyan, and we have one in Pune. Now we have an opportunity to do a lot of rationalization of, making things which are most in the work that is most suited. For example, our factory is more suited for a little more bulkier but lighter equipment, whereas Kilburn has heavier equipment, a capability of manufacturing heavier equipment. So when we do some kind of product swapping between this factory or the source of manufacturing of or executing the orders, I think we are going to derive a lot of cost advantages, transportation costs, and many other things that contributes to the overall EBITDA of the company. So this is one major aspect that is going to be seen on the bottom lines for the group next year. Just wanted to add this. So.
Okay. And with the kind of infra that you have at ME, what sort of revenue potential do we have, and what is your aspiration for ME in say 2-3 years? Where do you think ME can reach?
See, ME Energy is business is little different, as I understand, from that of Kilburn, in the sense we focus on larger systems whereby our own manufactured items revenue or value could be anywhere from 30% to 70%. So when we pick up orders of larger value, the manufactured item costs tend to come down, and the other BOP item, what we call balance of plant item, tends to increase, which gives us capability to cater to larger turnovers using lesser square feet areas under crane. So this is going to be this thing. So that also will improve ME Energy's EBITDA, because the turnover per person will go up when we start attacking on larger value orders. ME Energy's factory is not built for 150 or 200 ton equipment, which Kilburn's factory is. So these are little technical differences, but it's not that we have not done heavier one. We use different methods of metal moving or equipment moving in our factory than what Kilburn does.
Okay, sure. I'll get back in the queue. Thank you.
Thank you.
We'll take the next question from Shubham Upadhyay. Shubham, you can go ahead, please.
Good afternoon, everyone. I'm Shubham Upadhyay from the Microcap Minute. First of all, congratulations on a good set of number. So my first question is regarding, can you share the margin profile when it comes to the order which are executed at site versus order which are executed at factory? Because the last time in the con call you mentioned that the orders which are executed in this at the site have lower margin profile. So can we have that number?
Well, for the ones in the factory, I think, we would definitely be in the same range of 18 to 20%. And the ones at site, it could vary from time to time. Currently, we have only one project going at site, which is an IOCL Paradeep. But unfortunately, I don't have the numbers offhand. Sachin, is it possible?
What I can say is, out of this total closing orders of 236 as on December, what is being done at site is around only 25 crores. Yeah.
Okay, just 25 crores.
Yeah. Out of
Okay.
closing order.
Okay. And what percentage of the order is being exported of the current order book?
Our total closing order book is around 30 crores export out of this 236.
Okay, so 25 crores is at site and 30 crores is our export.
Right.
Okay. Thank you. I will rejoin the queue.
Yeah.
Thanks, Shubham. We'll take the next question from Richa Agarwal. Richa, you can go ahead, please.
Am I audible?
Yes.
Thank you for the opportunity. So my question is that, if you could talk a little more about competitive space as well, the competition from China and Germany. So when it comes to these order books of 1,000 crore that you're highlighting, do you see a high competitive intensity and, how do you see the margin profile? Also, if you could name some of the peers in domestic, listed space that are catering to the same kind of requirement for the clients.
Mr. Vijay, can you take that question for ME Energy?
Sure, I can. You see, China is known and good for replicating things, not in doing custom-built things. When it comes to catering to the specific requirements of customer, China cannot compete with us. So we have, at ME Energy at least, we have not seen many competition from them. Rather, I would say hardly any competition we have seen. Maybe 1 out of 100 opportunity we have seen China. So that's China. That's not a competition at all for us at ME Energy, because each waste to energy or energy saving or custom built thermal engineering system has a lot has a requirement of building a system or designing it from basic principles which Chinese cannot compete with us. So as far as ME Energy is concerned, this is not a competition for us. As far as Germany is concerned, we have done jobs for customers in Spain. We have done for Turkey. We have done for France. Most of the places we have had good prices, and we competed successfully with them, and we have not faced any competition from Germany.
Okay, and within India, sir, who would you consider your peer? This is a question for both Kilburn and ME Energy.
Shall I go ahead? Register, I will answer for ME Energy. You see, ME Energy competes with maybe 1 out of 4 or 5 times we compete with Thermax. Thermax is a much larger company, and they have a large product portfolio. So the equivalent turnover of what we do in energy saving, if you in the size and type of project that we do for at ME Energy, if you take, we are almost same in competition with Thermax, and Thermax is going for larger and bigger systems. So our opportunities are growing in the space, and we have this is from Thermax. Another competition we face is a company called Thermal Systems in Hyderabad, but their capabilities are more of a manufacturing, what we call as build to print. You give a drawing to them, they make it and give it to you. Than offering a complete comprehensive system with main equipment and balance of plant, turnkey, etc. So they do. So if you see, their profitabilities are much lower than us, because when it is a build to print job, it is like typically the buyer knows the weight of the equipment, so they put the price of fabric, cost of steel and cost of fabrication, and with the price into the price. So the price visibility is extremely high in such cases. So they're not able to compete with us when it comes to the system in terms of system building capability, and they will win orders where more of a price visible fabrication opportunities there when they are against us. So this is the main competition that we face in terms of energy saving projects.
I think Amritanshu here, Ranjit has got logged out. So I can just address the point which was raised on competition. So for Kilburn, I think the main competitors in listed spaces, in very small segments, you have Valchanagar Industries, which is listed. Apart from that, most of the players are unlisted. Either it's in, you have from China a competitor called Durite. You have Andritz from Germany, and then you have a lot of small manufacturers in the paddle dryer space, but no major listed players actually there in the segment. If that answers the question.
Yeah. Thank you so much. And sir, we cater to a bunch of sectors, and in the last recent con calls, we have been talking about, expanding the scope of opportunities, perhaps to API and other sectors. So if you could just give us some kind of update on, if we are making progress there. And when it comes to margin, is it sector dependent or is it product dependent that we offer? And if it is sector dependent, what kind of range do we see in different kind of sectors that we cater to?
I think it is more product dependent. You have margins which can be high in the same sector depending on the type of customized order you get. So I think it's more product dependent. When Ranjit rejoins, he can address that. Apart from that, what was the other question, please?
So first was on the margins, and the second was you were planning to enter some new segments like
New
API.
segments. So the MEA acquisition itself is a step to diversify and add new sectors in place. We recently got an order from the steel industry from one of the largest integrated steel players. That happened due to the strengths of Kilburn and ME coming together. Kilburn's balance sheet strength helped ME get the job secured, and Kilburn backed the order. So I think our play into the steel sector will increase going forward. Apart from that, API is something we already executing a job for granules, which is known. Once the prototype is set up and commercial production is done, then they would look at future expansion. So API is something we have entered for equipment manufacturing. We have diversified into air preheaters in the carbon black space. All the products which ME has is also utilized. Sachin, can you mute? ME products are also complementing Kilburn's range in the carbon black space, where we will be able to cater to a much larger range of products for carbon black industry. Nearly, I would guess 40% of all equipment would be available with us to set up a carbon black plant.
Okay. And sir, you have given a guidance, like rough guidance of 500 crore by FY25. So is this capex of 15 to 20 crore enough to reach there? And how do you see moving forward from there? Like, will you need more capex? If yes, what kind of capex it would require to scale up the revenues to, let's say, 2x of 500? Some kind of sense there, whether the expansion can be carried out
So
in the
Richa,
existing.
basically what Mr. Karta mentioned and which even Ranjit had mentioned, a lot of our orders are solution based, where some equipments are manufactured in-house and part of the equipments come are bought out. So if you see with this nominal capex which is being planned, I think 600 to 700 crores revenue can easily be achieved by the two entities combined. Uh, Also, with the kind of technology which the company possesses and the team which is there, some level of outsourcing can also be done. So I don't see a massive capex being required in terms of achieving a higher growth trajectory. I think the two plants together can help scale up significantly. But tomorrow, if any other opportunities do come up to add more products and range, then that might help. I think Ranjit has now rejoined, so he can address further queries.
Okay.
Am I audible?
Yes.
Yeah, sorry. Actually, I'm right now from Mr. Sachin's laptop. There was a crash. Yes, I'm back.
Okay, sir, just one last question. There's this lot of talk about, getting this increasing the share of biogas in the entire energy mix. So, I mean, do you see any significant potential or opportunity there? If you could talk a bit about that.
Yeah, so Ms. Richa, I would say that we are going one step at a time. 1 year back, probably when we had met, we said that we are looking at first going to, 4 to 500 crores. I think that's our first step. And as we go forward, I'm sure we'll look in that direction also. But as of now, we don't have any blueprint on the table.
Okay, and what is our current receivable days?
That was Sachin. Sachin, how much is it? 60 days, you said. Yeah.
60 days, is it? Okay, okay. Thank you so much.
Sachin, you're not audible.
We'll move on to the next participant. Sachin, do you have the answer to that?
Yeah, I told them networking days around 60 days. Networking cycle.
Sure.
Thank
Yeah. We'll take the next question from Yashi Loya. Yashi, you can go ahead, please.
Hi, thank you for the opportunity and congratulations on the good set of numbers. So I just had one question. So like as you guys have mentioned that we are receiving increasing orders from the steel industry. So are there any specific factors contributing or there is any trend that is going on? Can you share some light on that?
Well, when it comes to steel industry, I have to say that it is the success of this collaboration with heavy energy. And they have always had a strong penetration in the steel vertical. And that is also one of the reasons of this,
Mr. Lala, you're not very audible. I would appreciate if you can come closer and speak.
Yeah, so I was saying that this success in the steel industry is thanks to the collaboration with ME Energy. And going forward, we expect the success to continue.
Okay. And so like
Would like to add a sentence on that. ME Energy is very strong in providing solutions to steel industry. Steel industry as such is going for a massive expansion round. Most of the players are enhancing capacities, excepting the public sector steel authority. This thing. So if you see JSW or Tata Steel, everybody is increasing capacity. So when they put up new plants, we have an opportunity because steel is a guzzler of thermal energy, and when they try to guzzle it down, something becomes waste, and we try and help them to recover and reutilize it. So whatever they do, there is opportunity for us. So now with Kilburn's alliance between us, we can go for larger opportunities. We had been in the medium and smaller size opportunities in steel industries. Coming next 2 years, 3 years, we will go for larger this thing, and this positive run on steel industry is likely to last for next 2, 3, 4 years.
Yeah, I'm sorry that I had to drop out because of laptop crash. I'm back. Sincere apologies for the whole thing.
Okay, and so like going forward, what are the major industries that you think you'll get pre-orders from?
Well, we have inquiry pipeline across all industries, from petrochemicals, carbon black, soda ash. So the industry is same. I mean, if you refer to our presentation, we have mentioned what we are into, and generally we have inquiries all across the sectors. And we are also looking at a couple of other segments. This will continue.
Okay, thank you so much. All the best.
Thank you. We'll take the next question from Mahesh Atal. Mahesh, you can go ahead, please.
Congratulations on great set of numbers, sir. I'm fairly new to this company, so just wanted to know whether this acquisition that we have done of ME Energy, what have we paid for the acquisition, and what is the percentage of our holding? Can you please answer this?
Sachin, can you take that, please?
Percentage of holding, we have 100% acquisition. It will be a wholly owned, 100% wholly owned subsidiary, and our consideration is up to 99 crores.
99 crores.
Yeah.
And the highest revenue that the company has achieved is close to 65 crores, which will be this year, right? If I'm right, if you can correct me, Mr. Vijay, please.
Yeah, the highest revenue we have done was in 2017-18, that is 76.5 crores.
And what were the margins back then?
Oh, I wouldn't remember.
But generally, what is our margin? I mean, when we
would have booked, I think, 6 or 7 crores of PAT that year. That's what I remember.
how can you translate this to EBITDA, please?
I mean, I'm not. See, typically our EBITDA levels are 14-15%. That's what we had.
Fair
So
enough.
but this may not be the accurate number for that year.
Yeah, fair enough. That's a great. I mean, that's a great achievement, sir. One thing I just wanted to know, because waste heat recovery, I mean, that's one way of generating power units, if I'm not wrong.
Yes, power. Yeah.
So, what is the payback period when a company goes for waste heat recovery? Because if I am not wrong, and how are you going to compete with the likes of solar?
You see, solar energy is and waste heat recovery are two different aspects in an industrial plant. When you are forced to use heat in the process for producing a product in any industry, it is not possible to utilize 100% of the energy that you produce by burning of any fuel or using electricity. Some are going to go waste, and there comes the waste heat recovery opportunity, which is around 80% or maybe 75% of our revenues. So whereas solar is a energy source, so these are two this thing. So solar energy per se is not going to be a direct competition for energy saving. For example, if you're going to melt steel, you're going to burn some kind of fuel to melt steel, and the waste heat is going to come at the temperature at which the steel is going to be molten. So that solar cannot replace that. This is the plain simple. So with respect to power generation, it's a very this application is very common, where we actually use the waste heat for generating power. ME Energy has done a waste heat based power plant in Bangladesh, which produces around 16 megawatt electricity. It's in operation since 2016 or 17, I think. And that time, if I remember correctly, the payback period for the project for the customer was nearly 8 or 9 months only.
Oh, 8 or 9 months.
Yeah, I don't know now.
Okay,
But
great.
basically,
I think that's quietly, I mean, if we understand it, I mean, it's fairly less than what solar gives you, right?
yeah. Solar is the one thing about the solar is the plant. The factors are very low in the sense you get productivity for only 4 to 5 hours a day. Whereas if you have a engine-based or gas turbine-based power plant, the power plant will be working 24/7. So heat recovery works 24/7. We just now supplied a waste heat recovery boiler to Abu Dhabi on 15 megawatt gas turbines for a paper mill.
Sir, is this also eligible for carbon credits? I mean, if the company is taking your plant?
Yeah, so the until now the intermediaries who are the manufacturers, suppliers, or installers of energy saving systems are not eligible for claiming carbon credit, but the end user, the people who buy and recover the heat and reutilize, they are eligible for carbon credit, and carbon credit is available to the end users.
Fine. I mean, okay, that gives a great understanding of that. Even if a steel company is buying your product, he's going to get the carbon credit for that,
Yeah,
right?
they
If I'm not wrong.
they will get the carbon credit, not ME Energy or Kilburn Group.
Great, sir. Sir, just on the coming to Lala, sir, I had just one question to him. Kilburn, as such, Kilburn is majorly into the capex side. So, do you see that private capex kind of coming into like all this last 3 years? There was no capex from the private companies, not major capex. Are you seeing some kind of change in that environment, like private capex coming up? Because as capacities are already at the peakest stage, so are they coming up with new capacities? Do you see something happening there?
So most of our customers so far in the last 2 years have been private sector. Okay, that means capex is happening out over there. And you can also see that we have grown. So obviously the customers are somewhere or the other installing or expanding the facilities both in brownfield as well as greenfield projects. Now probably you are comparing with what the government is spending vis-a-vis the private players. I think that should not be the basis of comparison. But for sure, definitely the private capex is on. It's not something which has stopped. There could be a dip on quarter-to-quarter basis or an upward movement, but it is a continuous process.
And
And
one,
overall, it's an upward movement overall.
and sir, kind of, I see that there is some rise in the margins that you have, operating margins.
Right.
So, is it because of the, I mean, cost measurements that we have, I mean, cost optimization, or is it because of some leverage that we have? How exactly should we take it going forward? I mean, do we still have a great operating leverage in our business? And
Right.
with ME Energy coming up, do we see that going up and up?
Right. So I would say it's a number of factors which contribute to the higher margins. First is the product mix itself. So if you execute for the projects which have higher margins, so that is one contributor. Secondly, when you scale up your activities across, any industry, so that's true also for us. That also is the contributor. And going forward, we see this to be intact, or we'll try to definitely better it with two factories in place now. I think Mr. Karta already mentioned that we are going to rationalize the products which should be manufactured in which location, and that's how we expect that margins will stay good.
Fair enough, sir. Thanks and all the best, sir.
Thank you.
Thanks, Mahesh. We'll first take questions from those who've still not had a chance to ask a question. We'll take the next question from Alisha Mahawal. Alisha, you can go ahead, please.
Yeah, thanks. Hi, good afternoon. I hope I'm audible.
Yes, very much.
Yes. So just one question. When we started the year, we were saying that we had an inquiry pipeline of about 700-800 crores. Now we're saying that's gone up to almost 1,000 crores. But yet the order inflows that we're expecting for 24 are lower than what we got in 23. Despite all the strength in demand that we're talking about. So is it that competitive intensity is increased, or there was a larger order in 23, or has something else in the industry changed? And despite relatively lower order inflows, we're still talking of more than a 30% growth for next year. So again, are we expecting very strong order inflows in Q1, or how will we achieve this? Would be
Alicia,
helpful.
if I can,
On silo.
Alicia, if I can just intervene on this question.
Yes,
I
please.
think there's a little bit of a confusion regarding the total order which you are mentioning. The expectation is that in the fourth quarter we will have large orders coming in. So the issue is not with the flow of orders. The first half, the order booking was on the lower side. There's a higher demand, a higher flow of orders in the second half. And we are going to end the year with a higher order booking, a higher closing order book than which was the opening order book last year. Also, when we are talking of the 1,000 crore pipeline, you have a lot of orders which we cannot predict whether it's going to be finalized in March or will it be flowing into April. But with which month it's going to fall in, we don't know. So we still expect Q1 to have strong order inflows to come in, which will thereby boost the turnover in the coming year, which was not the case in FY24, where the first quarter had lower order booking. If that addresses your question, because I could see there's a little confusion regarding the opening and closing order book.
Because last year in March itself, we had received around 2 big orders amounting to around 70 crores. That was
Okay. So what I was referring to was order inflows in 23 full year was 354 crores. And so far, based on whatever commentary we've given, doesn't look like we'll have inflows of 350 crores. It'll be close, but probably lower.
We should be at 350 odd crores, or even it could be higher. But as I mentioned, a lot of orders might spill into getting finalized even in the month of April or May, because there's the order pipeline which has been highlighted. These normally get concluded over a 6-month period.
Okay. Let me put it this way. Are we just seeing more delay in decision making, or increase in competitive intensity, or maybe earlier we were talking of, a higher conversion ratio, which probably would have, moved lower a little bit? Is that leading to longer time to get the inflows?
So I would say that it could be more often the delay in the decision from our customers. As far as competition is concerned, I think they have existed and they'll continue to exist. So you win some and you lose some. But these delays that you're talking about, orders flowing in from March to April or May, is more of the delays from the customer.
Okay. And we'd got some orders for silos last year.
Right.
Have we got any incremental orders this year? Is there an update on that opportunity pipeline?
Not yet. Silos orders typically are for the greenfield projects. So there are a couple of greenfield projects where we have bid. We need to wait and watch how it's going.
Okay, great. Thank you. Best of luck.
Thank you, Alicia. We'll take the next question from Prolin. Prolin, you can go ahead, please. We'll move to Ganesh. Ganesh, you can go ahead, please.
Yeah, can you hear me?
Yes.
Hello. Oh, sorry, I just was on mute. Can I ask the question?
Yeah, Prolin.
I apologize, I was on mute. So I have one question, right? I mean, from Kilburn's point of view, as well as ME Industries' point of view, who are our key competitors, right? I mean, because from an ME industry, ME point of view, I think Thermax and ISJEC will be our larger competitors. So how do we compete against them? What is something that, what is the reason why customer chooses us versus some of our larger peers who have a much more solid track record in terms of execution? So can you help me understand the competitive landscape in both our core business and in our acquired business as well?
Yeah, so for the acquired business, maybe Mr. Vijay Karta can answer, but for the core business, we are talking about Kilburn. We've always had competition from local players and from abroad as well. So in the past, I've mentioned that when it comes to the carbon black industry, we have competition from Dorite from China, Arvos from Germany. For soda ash, we have quite a few Chinese competitors, and then Andritz from Chennai. For one of our product lines, paddle dryers, we have 3 or 4 competitors. We have Raj Process, Arrowhead, Wapco, Moj. Then for rotary dryers, we have FL Smith, Walchan Nagar. So these competitors stay. So I mean, they have been around and they'll continue to stay. And I have mentioned that we have some strengths in terms of our knowledge equity, in terms of the exotic metals which we have handled for last many years. We have built up this knowledge base in our company and the experience that we have. Okay. As far as ME Energy is concerned, I would request Mr. Vijay Karta to throw some light on this competition and the strengths.
Hello. So about the competition, we already discussed about this. Actually, we do compete with Thermax in a few cases, but we had not been competing because ISJEC is not very much into waste recovery systems. In fact, they have purchased from us. When they wanted a waste recovery system to complete the scope for a public sector project, they purchased the waste recovery system from us. So Thermax, of course, we compete actually. But then Thermax today wants to focus on larger and larger sizes and vacating the space. So in our space where we are the medium size and lower size, probably we have more orders than Thermax do. So now is the opportunity for us to go into larger systems and high value systems. So with Thermax, what happens is we have the know-how or technical capabilities to offer similar or better system, and at the same time, because we are a smaller organization, where the responses are faster, and we move much faster. In the many times, we find that by the time we reach the goalpost, Thermax is still working the same. So this is a very distinctive advantage. I want to very clearly say that we are not a cheaper alternative to Thermax. We also derive our good prices and we give good production systems. We do not go in for cheaper components to keep price low and compete with Thermax. So there is no price level based competition. It is always the quality, the content, and the capabilities and the know-how. That's what drives us in competing with these people.
So Vijayji, thanks a lot for that. One follow-up on that, Mr. Ranjit, would be when you say handling of metals, what is it that exactly is our moat? Is it like the chemistry part? Is it the forecasting or metallurgy? If you can double click a little bit on the comment that you made on handling the metals. And a follow-up, one more question to both of you would be, how much of our CapEx is linked to new projects and how much of it is in the existing project? Because this is more specifically to Mr. Vijay, but Ranjitji, you can also help me on that. Because Vijayji, what I understand is that globally, wherever there are these plants, right, where heat is used, there is a lot of waste of heat, right, so to say. So, I mean, there is a big opportunity in the existing installed base in terms of, recovering this heat as well. So if you can throw some light, how much of our projects come from existing installed capacity and how much is it dependent on greenfield or brownfield expansion, and yeah, on the metals part as well.
Right. So from the metals part, what I meant is definitely the metallurgy. So we handle an array of metals like aluminum, carbon steel, stainless steel, 316L, 304, then nickel-based alloys like Hist alloy, Inconel, Monel, titanium. So these are all exotic metals. And handling them, as a part of the whole welding process is definitely a complex thing. And this is where we have an edge. And as an organization, we have 350 to 400 welding procedures in place, which we have developed over a period of many decades. So that's where I was coming from. About the other question which you mentioned, of course, Vijay will mention about ME Energy. From the Kilburn perspective, I would like to say that we have orders from both, from the greenfield as well as the brownfield. Like we have customers like Birla Carbon, then Tata Chemicals. They have been the customers in the past, and they keep coming to us time and again, including Reliance. They have our installations, and sometimes they even need to upgrade the existing installations, and that's where we come in. So we have a combination of both, the greenfield and the brownfield. Yeah. Vijay, probably you can throw some light on your product portfolio.
Yeah, so basically, when you talk about waste heat recovery system, the opportunities are new, replacement, and retrofit. Retrofit is when there is some equipment working at a lower efficiency, you try and put an equipment to enhance. Replacement is when there is something is working and you put a new one, and new is a new. So is a new project that is coming up. So basically, maybe around 15 or 18 years back, after the 93 oil crisis, there was a spurt of opportunities on waste heat recovery on retrofit. Then later on, people, the plant and equipment and suppliers and process licensees started incorporating the waste heat recovery system as part of their original offer. So the retrofit market slowly started moving into the new. When the new opportunity comes, you place an equipment. For example, we are doing a project for a customer in Gujarat. The earlier plant was working for 13, 14 years with some technology, which was they did a retrofit for heat recovery. But then the new plant is coming with this thing, and we have joined with them for supplying the waste heat equipment. So now, whatever has gone into the plant, typically a waste heat system will have life of 20, 25 years. So whatever has gone into the industry between in the initial phase of oil price in 90s is going to come for replacement in replacement cycle very soon. Maybe 25, 30 years is the time when a boiler or a waste heat recovery thermal oil system or a hot water system gets replaced. So that replacement market is going to come in a big way. Having said this, today, ME Energy, if you see, almost 80% is new supplies, maybe around 10-12% will be balance 20-25% will be retrofit and replacements. So this is the situation with respect to the type of inquiries that we receive.
Great. Just one, yeah, that was very clear. Last question and more of a clarity. Did I understand it correctly that most of your projects, and this is for ME Energy, that payback would be less than a year for on an average for most of the projects?
Not all the projects. There are quite a few of them. It depends upon the type of project we are talking about. So when we talk about larger projects of in a waste heat recovery system, it cannot be just 6 months or 7 months. It will be the same. But typically, waste heat recovery systems in certain industries are paying back within 2.5, 3 years, making it, or maybe even up to 4 years, customers accept most of the industries. But when low-grade heat emitting industries, there are no opportunities. So we cannot just say that all will be, like 1 year. Another aspect is for waste heat recovery system to be good payback periods in waste heat industry comes with the plant load factor. How many hours do you run your plant? I can make a plant system. If it is a factory which runs batch type production, probably a waste heat recovery system will pay back much, much later. So there is no hard and fast that it has to be less than 1 year or something. It could be anywhere 3 to 4 years. Up to 4 years, we have seen customers accepting and going ahead with implementation of waste heat recovery practice.
Thank you, Mr. Vijay, and thank you, Mr. Ranjit, on all the best.
Thank you.
Thank you.
Yeah, we'll take the next question from Ganesh. You can go ahead, please.
Yeah, am I audible?
Yes, Ganesh.
Okay, thanks for the opportunity. So since we are developing custom built solutions for our customers, And I hear it is mid-size customers. So does it anyway limit our addressable market in terms of not capability, not necessarily capability, but from a scale standpoint?
Well, our customers like Reliance and Tata and Birlas are not mid-size.
Okay.
Yeah. So we have customers, across all segments, as I mentioned. So the pharmas, the chemicals, even the mid-cap companies or the mid-scale companies, they are our customers. So we have all across.
Okay.
Just to add to this, you see, when we say mid-size or smaller size, the equipment package is mid-size and small size. It is not the mid-size and small size customers we are talking about. As far as ME Energy is concerned, we have top customers in India today. You name the industry, top 1 or 2 or 3 will be ME Energy, where ME Energy has made a supply. So it could be a Reliance, it could be an HPCL, it could be a BPCL, or Britannia, or Pepsi, or this kind of customer. So we talk about mid-size packages, not mid-size customer. So if our explanations carried that the thing, you just wanted to just correct it.
Thanks a lot. So alluding to your earlier answer, retrofits, new and additions. So do you anticipate maintenance being a revenue stream at some point? Because of course everybody will require some sort of an annual maintenance, right?
Yes, at ME Energy this year we are making the first bid for O&M of a project. So we hope to add that into our basket going forward. The O&M is more of a people-oriented 24/7 business. So you need a little bit of different organization or organization structure to cater to. So we are gearing up. So this year it must be our first entry into this O&M space.
Got it. Just one or two questions. So last year we went through a significant amount of equity dilution. I am assuming around 22% to probably 1 or 2% here and there. So do you anticipate more equity dilution in the coming year or two?
I would request Amritanshu to take that question.
Well, as of now, we don't plan, we don't see any major, any reason for any equity dilution in the current state of affairs. The free cash flows of the company will be strong enough to take care of the routine capex as well as going forward into its growth plans in terms of working capital. And whatever equity dilution has happened, that will give enough headroom for whatever growth plans the company has organically.
Got it. One last question. What do you see as a conversion ratio in terms of the proposals that come to us and how much we succeed in getting converted to orders?
Well, that depends on the verticals that we are working in. We have a higher ratio in industries like soda ash, carbon black, in the tea industry. In the chemical industry, for us is relatively lower, and we have recently, stepped into the pharma industry. So there also we have a good conversion rate. So I would say that on an average, if you have 1,000 crore pipeline, I mean, I'm comparing it with the pipeline that we have. So I'm sure we can have a conversion rate of 25 to 30%, sometimes even higher. Because we are very particular to what we address. It's not that we just build up the pipeline of, we have an addressable, let's say, inquiries where we try to optimize our margins as well.
Got it. So, I mean, looking at the economic situation, looking at how the country is growing, somebody alluded to the steel industry earlier. So, a 2-3 year time frame, how do you anticipate the growth in the order pipeline to be?
Let me answer this slightly differently. I mean, probably a year and a half back when we were speaking, We had made it very clear that our vision is to touch a figure of around 400 crores plus. Today we are talking about 500. So as we move forward, we are confident that we will go beyond 500, but we wouldn't want to count our eggs today.
Yeah, qualitatively, not
definitely
quantitatively.
So we are very confident that we will continue to grow as the nation grows.
Great. Thank you. That's all from my side.
Thank you.
We'll take one last question for the day from the line of Garvit Goyal. Garvit, you can go ahead, please.
Hi, am I audible?
Yes, Garvit.
So can you spend 2 minutes on giving an idea on the export as an opportunity for us? Like you mentioned earlier, we do have product customization capabilities, which Chinese players lack. So going ahead, are we looking for exports as an opportunity to grab market share in global space?
Yeah, that's a continuous exercise. We do have a reasonably good, export order book, especially on the VFVD for teas, even for our, equipment for carbon black. We have customers who buy from us in Europe and US. That's a continuous process. Now it may fluctuate from year to year, but I guess in the next 2 to 3 years it should be an upward trend.
So just last question on the like the numbers you gave in the opening commentary. So going by that, are you people confident enough to reach top line of 120 CR in this quarter with a bit of somewhere around 16 to 17%?
I don't think we give a quarterly guidance, so I would.
Actually, you mentioned for the yearly target. So if we just back calculate the thing, so the number comes out to be this.
Well, what I mentioned that we should end with 18 to 20% EBITDA.
Garvit, you can derive your conclusions. The management has given its annual guidance. Yeah.
Okay.
That was our last question for the day. So would you like to give any closing comments before we end the conference call?
Yeah. Once again, I would like to thank all of you for participating in this post-earnings call. And I guess we will again be meeting after a quarter, and we will keep continuing giving you an update from time to time. There are one or two questions probably which I've taken back, and we'll try to address them.
Right, sir. Thank you so much. Thank you to all the participants for joining us on this call. I would also request Mr. Vijay Karta if you would like to give any closing comments.
Yes, I'd like to. In fact, in my chat box, there is a question from somebody as to whether ME Energy is catering to the cement industry. See, cement industry, we have worked a very little bit if you compare it to the total opportunity available in that sector. That is only for replacement of certain items and manufacturing. But as far as waste heat industry systems in cement industry as a whole, the packages are of larger size, like around each package, lower size will be 60 crores, 70 crores, and medium size will be 100 crores, 200 crores, 300 crores, depending upon the size of the cement plant, number of locations, etc. So ME Energy, though have capability to design and manufacture in-house, did not have the financial muscle to bid for this. I think that is in place now. The next point we have to, milestone we have to achieve to get into cement plant waste based system is getting a PTR. So we will have to, we will work on this, and maybe very soon, maybe 4 or 5 quarters from now, we will have our first PTR fast track record breakthrough, and I think we'll be home with the cement industry also. And I know that it's a very large opportunity, and it is only going to grow. So that's what I wanted to answer. And also, this was a first time experience for me to face the investors, and I think I did my best and continue to do that. And thank you very much.
Yes, Mr. Lal.
One more question from Richa Agarwal. Maybe Sachin can answer that. She says that related to ME Energy acquisition, there was a plan to finance it through share issuance. Is this done or yet to happen?
Yeah, Sachin? It is done. Fundraise has been done. The other processes are underway. fundraise has been already completed.
Right. Thank you so much to all the participants for joining us on this call, and thank you to the entire team at Kilburn and ME Energy for giving us their valuable time. This brings us to the end of this conference call. And thank you, everyone. You may log off now.
Thank you.
Thank you, sir. Thank you all.
Thank you.